All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Happy Monday to you. And if you're just joining, glad you could make it here today. Oh, you know what? I'm going to go ahead and tweet out a link to the webinar. Sorry, I was meaning to do this. I should tweet this link out more often, but I just don't do it that often. I should do it more than I do. All right, there we go. All right, so let's go ahead and get started with the morning analysis, and let's go over to the. Oh, thanks guys for the retweets. I really appreciate that. Let's go over to the euro, and we're going to start there. So here's the euro dollar, and Paul and I we were discussing about about the dollar, and I'm the thing that makes me a little hesitant is that I know that we are really close to this channel support. And if you look at the daily chart, you can see all comes in right around about the 110 level. The 110 level is going to be a really big support as far as I'm concerned. And you can see you can take this low to high, this just of the last move from 108 and change to 117. The 786 comes in at 110. So this is the most important level that we have. I mean, we can make our way back down to this support. Here, let's delete some of this. This is a 4-hour chart. Get rid of some of those lines from last week. You can see that we have this support that's coming into play. That's around this 110.80 level, 110.90. Remember, we dropped below 111 last week. It was like that was a great place to pick up the euro if you wanted just to play it for a bounce. But if we break through 110.90, or I think we had written down 110.90, that's going to expose 110, and that's where the rubber meets the road. So, in my opinion, it's hard to be very bearish the euro while we're above 110, okay? But for today, it shouldn't be an issue. We shouldn't even come close to that today. What we may test today is this 110.90, and that'll be key. And especially if you think about the Swissy, like if the Swissy decides it wants to make a move, you look at the Swissy. If all of a sudden we stage a big rally outside of like that 98.50 level, that resistance that we're talking about, if that happens, the euro is going to slip. It's going to slip, and we're going to fall down towards here. Especially if we get some strong PCE, like if personal income or personal spending tick up at all, there's a good chance that we test these levels. And then if the Swissy breaks above 98.50, that could propel us even higher. But I wouldn't count on that right now. So today, 110.50 or 110, I'm sorry, 110.90, very key support for today. All right. Now, if we break through there when we come back on the Lunch Money webinar in about 5 hours from now, we'll reassess where we're at. Okay. All right, now resistance. Let's talk about resistance for the euro. Okay, obviously we're struggling, and we struggled overnight as we broke above 112. Being above 112, I thought I was short the euro over the weekend. I wasn't. I don't have any short exposure in the euro. But I was thinking to myself, I'm like, oh, I'm short the euro, around the 112 level from last week. But when I pulled up my accounts, I was like, oh, I guess I'm not. I guess I covered that on Friday. But 112.15, which the overnight high is 112.14. That's resistance today, and if we can scale that, then that opens up that move to retest this trend line again. Yeah, you can see it through here. Okay, so we'll stage another rally above 112.15 back up to 113. Okay, but 112.15 is going to be overnight resistance, and that's going to be key resistance today. And again, if you're looking at U.S. data, PCE comes in weak, inflation data comes in weak, maybe the home sales numbers come in weak, whatever it is, we could challenge this resistance today. Okay, we're still in a very big range environment, and it would take a break below 110 here sometime later this week for us to shift from a range environment to a bearish environment. If we get below that yellow line right there, will put us in a bearish trend. All right, let's go take a look at the cable. So the cable's got a nice little bid today, and I'll tell you something that scared me last week regarding the pound. Um, it was really the breakdown of like some of the crosses, like the euro or the pound New Zealand, excuse me, and that breakdown below 240 last week, was, if you're long the cable, that's a little frightening to look at. But right now, the pound's up, a little bit. It's up 12 pips. It was up even further earlier this morning, but it's up like 15 pips right now, and the euro's down a little. But you see how the cable's kind of rolling over here. That's a 4-hour chart. Let's go back over to the daily. This is, again, this is kind of concerning for cable bulls. Let's remove some of these from last week. Okay, see how we broke below this yellow trend line here? The yellow trend line wouldn't be such a big deal, but it matches up with the, upper trend line over here. And let me redraw this a little bit. So when you're looking at this channel that we had, okay, I drew it through, down here, because that red candle, really, it was a bad print on a Friday afternoon. Okay, but you can see the cable's broken down, and it broke, over the course of the last week and a half or so. Really, when we came below like the 152 level, it kind of exposed a lot of this downside here, and we're at risk really for us getting a nice foothold below this 151.60. And on Friday, we tried to trade below it, and it was Friday, so there was no follow through. But you got to be really careful with this cable. And like I said, the pound doesn't look too healthy. It doesn't look healthy against some of these crosses, like the pound New Zealand right now. The euro pound is threatening to break above 74 pence. Even though we got a little bit of a reversal this morning, it still is not looking super healthy. So be careful with the cable. And I don't have any pound exposure at the moment. I don't. I just I'm being very cautious with it. One of the things that we recognized last week is that there's just been no bounce. I mean, when a currency fails to bounce, and after having such an aggressive drop, that suggests to me that there's more downside in the cable. Just and all these shallow retracements. Very bearish price action. Okay, so the low from last week, which was on Friday, was 151.35. So that's going to be pretty key support for today. If you're a bull or there's any bulls out there, 51.35 is key support today. If that breaks, that that just that just suggests that then we can't catch a bid. That maybe false breakdown that we saw from Friday is just, you know, it was just Friday price action. Then we start breaking below these lows, and that's going to start exposing a move down towards like the high 148 or 140 level, like 147, 148. Resistance, we'll have to take the overnight high. And matter of fact, I'd probably even go something a little higher than that, like this spike high from a couple of days ago, like on Friday. I think the spike high was at 152.60. Really, we got to start we have to take that level out, because that would be a, kind of posting a higher high, or at least match the high. So if we broke it, it'd be a higher high. That really needs to happen to take this downside pressure off. Okay, so that comes in at 152.60. That should be the resistance for today. We're in a range environment, but we are threatening to turn lower. Just like the euro, if the euro breaks through 110, I mean, that's going to switch us from a range bias to a bearish bias. The cable's in a range environment, but it really has the potential to turn bearish. All right, let's go over to the Swissy. Now, we talked a lot about the Swissy this morning. I don't know if we really need to discuss it much further, other than we are within, at this point in time, within about 40 pips of having a pretty meaningful breakout. If the if the Swissy, excuse me, breaks 82.50 or 82.40, excuse me, it's the high from last week, 98.42. So I'm just going to write down 98.50.9850. That's really key resistance. If we break that resistance, we'll go from a range environment to a bullish environment. Okay, but the reason why it's so significant is because it's a downtrend line that's capped us since January of 2015. More importantly, it's a trend line that comes in from 2001 all the way down to where we are currently. There is one last trend line that we'll have to pay attention to, I think, which would be right here, if I'm not mistaken. Here, it's trying to magnetize towards those highs, so. Looks something like this. So as we make our way back up towards parity, I mean, this is all going to be, everywhere from 98.50 to parity is going to be really, key. But if we eventually break parity, that's where the breakout is happening. Okay, there's a lot of work though. Between here and there, there's a lot of horizontal resistance that would need to be taken out. All right, so here's your daily chart. Going back to the daily, key resistance. Now support, any spike towards 97.50 is being bought currently, and you can see the long wicks. Any move down towards 97.50, they just get scooped up. So I don't think today would be anything different. So if we make a move down towards 97.50, you probably just want to look at it as an opportunity to get on the long side. Okay. All right, let's take a look at the yen. The yen staged a really big reversal. This was actually huge from Friday. Let's go ahead and I don't have any yen exposure. But you can see the dollar yen was moving up with risk on Friday of last week. We had turned from that support. We broke out. Now what that ends up looking like is a false breakout. Now here's the thing, guys. If we take out the support, we are going to absolutely crap the bed. Meaning if we break through this support here, it is going, I mean, we're going to see a pretty massive breakdown in the yen. Because whenever you get a false breakout, um, whether it's to the upside or to the downside, so let me grab a pen here. You get a false breakout to the upside. If we break through here, I mean, we're gonna be, we're gonna be testing somewhere down here. Okay, it'd be the exact same going the other direction too. If we would have had a false breakout here, we would have reversed back up towards 122. So right now, the risk is that we had this false breakout to the upside. It's probably squeezed a lot of people. Okay, sorry, but anyway, what I'm going to do is I'm going to write down support 119. What's the low here? 119.22. It's going to be really key support. So I'm going to write 119.20. Now, I doubt we make it down there today unless the equity markets, really just come under a lot of pressure. I doubt we make it down there. But now any rally back up towards this previous trend line and that resistance here, that's going to be a problem. You're probably going to find a lot of sellers as you approach this 120. I know it says 66 right now, but this is a descending trend line, so it's going to be about 120.60. We'll find some sellers. So we are in a range. Well, actually, I take that back. We're in a bearish trend still. Bearish breakdown, consolidation. Last week, the risk of pulling us out of that bearish trend, rallying back up towards here, was trying to happen, but now we got this false breakout to the upside, which really just kind of could accelerate the downside now. So it is still a bearish trend. All right, let's go over to the Canadian. All right, so here's the US dollar Canadian. Now, the US dollar Canadian last week, we rallied above 134, probably squeezed out a lot of traders, a lot of shorts, probably got squeezed out there. A lot of people probably even got long up towards 134, and then we slipped. Okay, so when we fell last week, we threatened to break below this 133. But what happened is we held that 133 and we held the breakout point and we've already bounced back. Okay. So 133 was key on Friday. It's still critical support for today. And as long as we're holding above 133, the risk is, we test this 134.20 or whatever these highs were, 134.15, 16. We're still bullish. That breakout above the 133, 60, 70 level, right where we're at last week, put the bulls back in charge. So again, as long as we're above 133, it still looks bullish here. All right, let's go take a look at the Kiwi. So the Kiwi, and I do have a short position in the Kiwi. Let me remove all this stuff from last week. The daily candle is the candle that I think you should pay close attention to, especially by the end of today. If we close at our lows, or red or near our lows on the day, like let's say the candle closed right here, that'd be a bearish candle because we have a wick, a failed breakout attempt above that trend line, like a reversal inverted hammer, you know, just left a lot of buyers kind of stranded up at the top. And it's a bearish candle for right now. Doesn't mean by the end of the day it'll be that way. But as I told you guys last night, or I told you earlier, as long as we stay below 64 cents, it remains bearish. So resistance, 64. Key level of resistance, it is still bearish for right now. Support, that comes right in that 38% retracement. So really a 618 comes in at 63 cents. And this is you can see this right here. We wrote that down last week. It's still a big deal. So on any move lower, because it's the 618, any move lower, 63 cents should support. Okay, when I get back, we're going to do the Aussie. We're going to look at the dollar index. We'll take a look at the Nordic currencies, the peso. So don't go anywhere. I'll be back in a few moments. Thanks, everybody. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. So we're gonna finish up with we have the Aussie coming up. Kiwi's under a little bit of pressure here. Let's go take a look at the Aussie. The Aussie is well below 70 cents again. Aussie's really struggling. Here's the Aussie dollar. So last week, we pointed out that this resistance was going to be key. Okay, and it was the 70-40 level. That I think we did that on Friday. And the thing about the Kiwi or the Aussie, excuse me, is that I know I mentioned this last week, and I'm going to reiterate. I'm a little bummed out I didn't get short last week when we were at the 72-cent level. That was the underside of this broken trend line. This broken trend line, by the way, is a multi-decade broken trend line. 2001, 2008. And you can see where we broke that as of late, and I'm a little upset that I'm not on the short side of the Aussie at this moment, but the Aussie's coming back under pressure, and really this low right here is going to be very critical for bulls. Okay, and that low comes in at 69.37. It's not too far away from where we're at. It's about 50 pips away, but that is going to be very critical support. So I'm going to write that down as 69.30. I'll write down 69.35 actually, 0.6935. That it says really key support. Okay, resistance is any move back up to 70.40 is going to give us some, a tough time. And I believe, if I'm not mistaken, that was a 38% retracement. Wasn't even a 38% retracement, actually. Just very shallow retracements, which obviously suggests that there's the potential follow through is really high. Whenever you get that shallow bounce, shallow pullbacks usually lead to continuations and aggressive ones too. So 70.40 is resistance at the moment. Okay, let's go take a look at the dollar index. And I don't have the dollar index up right now, and let's see here. Okay. All right, so here's the dollar index, and let's go back over to the daily. Okay, so The thing about the dollar index, if you take the high from, this is from August to the low at the end of August, we're really struggling with the 618 retracement. You can see it right through here. Okay, there's a 618. Okay, we're struggling with those resistance levels right there. That's obviously going to be really key, because if we can break above that, that exposes a move back towards this channel top. Okay. Um, that resistance right now comes in at Friday's highs, which will be at 96.70. I know we've been writing down 96.60 pretty consistently for the last week. Since we went above it the end of last week, 96.70 is key, because if we can get above there, it'll expose some of that upside of that. I need to put bearish back on here. Okay, the failure at 72 cents keeps that bearish. Sorry. So if we can break through this resistance, that exposes the upper end of this range of the flag, which is actually a bull flag, larger bull flag pattern on a weekly basis. But it will just challenge the upper end of the flag pattern. Okay, support. Any dip in support back down towards 95.40 is going to be, you know, going to be supported. So that spike low came in at 95.45. So any move back down there, very well supported. 95.45. Okay. Now let's go ahead and take a look at the peso really quick. See what the peso is doing. Now the peso last week, this was a very key rejection of the peso. That move above 1730. That did provide for a bit of a reversal, on, I think it was Thursday. So that was Thursday. Friday we sold off a little bit and bounced back, and today we're still recovering. Actually, we probably just challenged a 618, but let's double check. We did. Okay, so if you guys trade the peso, I would say that this 1713 right here, and then 1670 to 1713, that's your range at the moment. Now it's still in a bullish trend, but for those of you guys that, those of you guys that want to play the peso, you might, if you want to play it to the short side, just knowing you're going counter trend, just keep your stops above 1713, I would think. And if you want to play it with in the direction of the trend, you just wait for a dip down to 1670 down here to play it to the long side. So remember, we're kind of in this bigger range, but in a very, very bullish trend. It's a weekly chart, very bullish trend. You look at the Norwegian krona, we're still in breakout territory today and continuing higher, seeing it strong. We probably are going to be challenging some resistance soon. Oh yeah. Of this range that we were in for a good month and a half, resistance comes in at 862. 8.62. That's going to be key resistance for you guys that trade the Nordic currency, the US dollar, Norwegian krona. And then I would just be looking to buy dips back down to 843. So if I was going to be trading the US dollar, Norwegian krona, I would personally, I don't know if I would short it, but I would just be looking to play dips back down here. That's what I would be thinking. Um, Very bullish move. And dips back down towards 843. Again, 843 is the upper end of that, that breakout point rather. So playing it back down to the breakout point would be the best way to do it, in my opinion. 8.43. Okay. Let's take a look at the Swedish krona. Now the Swedish krona is just making its way back into the, into its range. We are at the 50% retracement. It's just range bound on a longer term basis. Obviously, here's the weekly chart. We're just, stuck in the range. All right, let me take some of your questions now because your bias chart is done. So let's go over to earlier.